Experts fear foreclosure spike. Hey everybody, bull boom, bear bust. My name is JJ. Today we've got another housing market update. We're going to tell you what the quote unquote experts are saying. We're also going to look at the delinquency rates, the protection programs that are in place, the low mortgage rates that are keeping this bubble inflated, and a lot of other news to get into in the housing market. Let's go ahead and get started. And let's start right here. This is a brief overview of what's happening in the housing market as far as keeping the bubble inflated. And this is very general. Of course, there's lots of other factors here. We could add into this and make this an hour, 2-hour video. But here are the big ones. Right now we've still got nearly 3 million homeowners behind on their payments. That's out of CFPB. 5.6% of all mortgages are currently in delinquent status. And here are some of the risks that could pop the housing bubble, deflate the housing bubble. 1, rising mortgage rates. End of protections. 2, 3, big change in bank regulation. That means no more fractional lending. Monetary system reform, that kind of goes along with number 4 there. But that would be a more broad changing of the monetary structure versus just bank lending practices. And finally, an outage event. We have grid attacks, web outage, glitch, etc. And again, there's lots of other factors, but here are some of the big ones that I want to talk about today. And let's look through some of these and figure out if these experts, are they really experts or not? And do they really fear a foreclosure spike? Or are the experts waiting on the sidelines with cash, waiting to buy a foreclosed home at a lower price? Let's go ahead and get into some of the information today and some of the news articles out recently. Let's start right here. This is out of moneywise.com. Experts worry about a spike in foreclosures. And CFPB Acting Director Dave Ojo, I'm not sure if I got that right, says, quote, millions of families are at risk of losing their homes to foreclosure in the coming months, even as the country opens back up, unquote. So this so-called recovery that we've been hearing so much about on the news media and the business channels, well, there's still nearly 3 million people delinquent on their mortgage. So as you can see, it may be a recovery for the markets and for the mega corporations and the billionaires and millionaires. But a lot of people on the bottom 50% are still struggling. And that's part of what we call the K-shaped recovery, where the wealth divide, the wealth gap gets even wider as the people that have assets and capabilities of getting in the right investments with big sums of money ride the bull to new levels of wealth during this time. All right, another headline here, late mortgages are dropping, but millions are still struggling. Back to what we talked about, still nearly 3 million people are delinquent on their mortgages. We're going to talk about the numbers here in a minute. Now, delinquencies are dropping, but experts worry about a foreclosure wave. Now, they're dropping from the previous few months, but overall, they're still very, very elevated from 1 year ago and before the pandemic, before the shutdowns. Now, next, let's take a look at this chart out of CoreLogic, and it shows you the breakdown of the 5.6% of all mortgages that are in delinquent status. Now, the dark line that represents this year, and this was January 2021, January 2020 in the lighter blue shade. And as you can see, depending on which one you look at, as far as number of days late, for example, the 90-day late category is more than double, actually more than triple what it was in 2020. So we're in an economic recovery, they say, but triple the people are delinquent on their mortgages. Does that sound like a recovery? All right, and again, we have to go back to the protections. How many more homes would be on the market right now if the protections were not in place? These are unprecedented protections. We've never had this wide scale type of protection from being foreclosed. And also you have to talk about rents too when you talk about home prices in the housing bubble, because the more rents are prevented from falling, then the more people look to buy a home because rent prices are high. So people are looking at the cost of rent versus buying, and high rents push more people into buying. If the evictions were allowed to take place, rents would be dropping by a big amount, and more people would not be pushed and incentivized to go and put a big get a big loan and try to buy a home. All right, so they're both connected. The rental and the housing market, the home prices are definitely connected. All right, the highest states for delinquencies are Hawaii, Nevada, DC, Florida, and Alaska. Hawaii is certainly a nice place, but it's nice with a price, as they say. And a big reason for that was their big industry over there, tourism, was basically decimated during the shutdowns. But here we are in this so-called reopening, and these homeowners are not doing so good with 7% delinquent. Let's talk about protections now. Many people believe that these protection programs are never going to end. There's always going to be a can, and there's always going to be a road to kick it down. Someone put that down in comments, so I thought that was pretty good way of putting it. So we have to talk about the Consumer Financial Protection Bureau once again, because they're out there looking to impose a new set of rules and regulations for banks. So proposing mortgage services to change their way of dealing with people in foreclosure or delinquency to avoid foreclosure. Millions of homeowners expected to exit forbearance in the coming months. Well, the forbearance could be extended, but if it's not, these Consumer Financial Protection Bureaus out there saying that the following changes need to be made. Things like giving borrowers more time before foreclosure proceedings begin. Give more servicing options. Things like less paperwork for borrowers that are behind to try to extend their loan or even refinance. All right, let's go back to this chart right here. Our bullet points, the big change in bank regulations. That means if banks are no longer allowed to lend out money that they don't have in their vaults or in the deposits, then that would drastically pull back on the mortgage lending, because banks could not leverage themselves so much, and therefore the demand for homes would go down a lot if banks were regulated. Will that happen? I really doubt it. The same thing here, monetary system reform. Will anyone come in and prevent the endless debt from being printed? Very unlikely. Or there could be some big outage or event that takes place that brings the whole digital system down, or at least to a halt, and that in itself would cause a lot of panic and market chaos, to say the least. Now, a lot of people are out there saying that this housing bubble is a ticking time bomb waiting to explode, and it's going to come crashing down. Other people, like myself, say that it doesn't have to crash at any point. Basically, they can double home prices from here if they want to. All they have to do is deregulate the banks more money being loaned, and then continue the foreclosure preventions. No one gets their home taken from them, even if they stop making payments. Now, for this bubble to be pricked, you would have to stop the money flowing, and that means a pullback on the lending, less handouts to people, and less taking on endless amounts of debt. Will it ever end? I encourage everybody to be very, very cautious. Do your research before taking a big financial plunge into buying a home. I'm going to wrap this one up right here. As always, everybody, stay well, stay safe, stay prepared. See you back here next time, hopefully. Till then, peace.